Okay, so I'm going to start. Thank you so much for coming, and thanks particularly also on the people online. I'm Jeremy Zettelmeier. I'm the director of Bruegel. We have a super panel on a super hot topic, probably the hottest topic in the whole world, covering anything from climate to international trade tensions and industrial development. And so we're going to have a great panel. The reason I'm standing is because I will attend about half an hour, but I have to leave at 4. So I've asked Alicia to take over as the chair after she presents, and she will also present the fantastic discussions that we have. It's going to be really interesting, and for me as a macroeconomist, the reason why this topic is so interesting is because the way I approach it is this any different from 20 or 30 years ago when we were telling China, well, you have to change your growth model and invest and save less and consume more? And the answer is, yeah, it's actually somewhat different, because it's also the composition of investment that matters. And reassuringly, it matters in an area where actually the state would have a role, even in the West, right? Namely infrastructure. And so Alicia has a solution for the problem, and she's going to present that solution. So I'm going to sit in the front row and hand over to her. Go ahead, Alicia.
Okay, so hello everybody. So it's a pleasure to see you all. I keep on getting comments from people who are online that they want to speak, and I don't think they can speak. My co-author is there also, Hao Xin-Mu. He also can't speak, so I feel it, and he's really like the expert. But anyway, I'm sure he will put notes of your comments and any
they can make
other
questions. They can make
Yes.
comments on Slido, though, right?
Yes, exactly.
You have
But
to
he
say
cannot
how they do
respond
that.
on Slido. But he's listening to me now, so Hao-Xin, don't worry, I'll take care, and I'm sure that we can respond offline if the questions are very hard, which I hope they won't. Why is this an important topic? I think we have a presentation, don't we? Yes, maybe we can upload it. I agree it's an important topic, not only because China is the largest emitter, but also the largest, supposedly, solution. And that supposedly is what we want to discuss today. There's all kinds of news on China's overwhelming role in decarbonization, whether it's China itself. So we had this interesting FT article on China being the electro state or something like that. Yeah, it's like China is going to be the first country in the world really electrifying fully or nearly fully. But at the same time, China is helping the rest of the world do the same. And the question when we started this project was, can China actually do it? I mean, can we trust the fact that China can produce enough renewables for everybody to decarbonize? And we tried very hard, actually. Jeremy, you gave us a suggestion, you'll see it. We actually carried it out in even having harder scenarios of net zero. Actually, it's even better, and I'll explain why in a minute. i.e., China can do it. Can actually produce enough renewables for its own decarbonization goals. And we could talk about whether they need something else now. There was another article on China's amazing nuclear projects, basically at a cost of nuclear being competitive with US shale gas. That was kind of the article that we had in the news. So basically very cheap nuclear-related energy. So all of this to say that we only focus on renewables, but focusing on that, making some assumptions, we find out that, yes, China can do it all, can keep its market share, export-wise, of renewables, and at the same time can actually fulfill its targets. But there's a trick to what I'm saying, which you will see if I see the slides. If not, I'm not sure you're going to be able to follow. I sent them before. I don't know if I can just see them somewhere. There's a trick to that, and it is that China is actually not making the investments needed in the grid to be able, and this reminds me of Spain, as you can imagine, to be able to actually deploy all of that installation. So installation is proceeding magnificently, but it is actually not being used. And that's very interesting. And the main reason is that they have not made the investments in the grid. So what we're going to conclude, the solution is, why don't you move to, instead of producing renewables, not only for China and the world, but basically not being able to sell them all, as you will see in a minute, and piling up overcapacity, why don't you use that fixed asset investment to improve the grid and be able to then use the renewables you produce? This would hit actually an amazingly important target geopolitically, which is that is a non-tradable good compared to continuing to produce in renewables. So in that regard, we think that, not only is it better for China, it's even better globally, because we would avoid one of these biggest problems, which is overcapacity. If that was clear, I could actually go, because what I'm going to do now is only show graphs to make my point. But that was the point. And we even estimate, because for China, we feel that, why are they doing all of this? Maybe because they need some source of growth, maybe? Beyond, the rhetoric of decarbonizing or helping the world decarbonize. So we actually, at the very end, show that the actual contribution to growth of doing that green infra, which is what the title says, would be the same than that excess investment in manufacturing of green tech. So what we're trying to say is, do it. You're not going to lose anything in terms of growth engine. I'm not sure anybody is listening out there in China, but that was our point. So this conference is less about, of course it's about green tech, but it's mostly about giving China a chance to avoid this overcapacity while still being able to keep its growth. This is kind of the idea of this. Now, I found my pointer, my slides, and we're ready to go. I'll be very quick. So, and then I just need to be able to move it. Everything I said is right here. I'm not going to reread it, but it's basically the kind of the intro, or if you want, the reason why we wrote this paper. So we, of course, know that China is key for decarbonization, whether it's both as a problem and as a solution. So here you have energy-related emissions contribute. So basically, first thing is, most of what China needs to worry about in terms of decarbonization is about energy. Yeah, with only of which only a limited share is being decarbonized by renewables yet, and much more effort is needed. This kind of doesn't ring the bell when you see the numbers that, wow, they have so much installed capacity. You'll see later that it is installed, not necessarily used. That's one of the key graphs of our presentation. This is, of course, China's critical role on the emission side, but also on the actual production of renewable equipment, as you can see there. So it's basically, 80% of the world, as massive as that. So in a way, you may say that, yes, China contributes hugely to the problem, 32% of emissions, but actually contributes even more hugely to the solution if you get that those numbers, especially, but both, even wind turbines, as you see, which was not the case years ago, now is still very much dominated by China. This is basically the NDCs of a number of countries, but what we want to show you with that is how much of the imports, say, of solar panels of many of these countries are from China. So Brazil, 100%. Saudi, 100%. Pakistan, 100%. Europe is at 71%. So for some countries, there's no alternative, zero alternative. And the question if you see this, is can China still provide? I mean, that would have been the first. We were in a way, when we started, we thought we would find China would not be able to do this given the amount of renewables that the whole world needs to acquire. But actually, given their capex, the huge amount of investment, and the already humongous capacity, the answer is yes, they can. And that's in itself quite a finding, because we don't need to worry about that. If anything, we need to worry about the concentration, which will only continue to increase everywhere. Or at least that's what we have seen so far. So this is China's, so to achieve carbon neutrality and taking 80% renewable energy share by 2060, which is China's targets, China's energy demand will need to peak soon. Will it peak? Yes. So what we hear is that it will peak even before the target, 2030. So the problem is not so much China's ability, at least the NDCs, and then we have, as you mentioned, we used the actual decarbonization goals, but for peaking, they're not a problem whatsoever. If anything, is 2060, which, as you can see, is much steeper. The rest of the world, I think you can see the issue there is that it is steeper than China after peaking. So in a way, they need to make even more an effort than China will after peaking. That's what you have in the global primary energy mix there. Can China produce enough renewables? So this is the question that we thought we should worry about. No, we don't need to worry about this one. So we picked the highest forecast, so this is changed, Jeremy, since we discussed here at Bruegel. We picked the highest forecast for China's solar and wind energy demand. So first we take the APS, so announced pledges scenario, but also the net zero scenario. And in both cases, basically China can produce and install enough renewables for its targets. That's what we find in different scenarios. I won't get into the details here because I would like to have a bigger, more open conversation. For the rest of the world, we use net zero emission this time, so tighter. The reason why it's actually better than when we use NDCs is that the IEA net zero scenarios have better demand scenario. So in other words, they kind of balance out. So in other words, no matter which scenario you use, China can cover global demand in the future. Why is this important? Because, I can tell you, when you discuss overcapacity in China, you've written a wonderful paper about that, people tend to tell you, how do you know? This is the future. Maybe we have a little bit now because you're late with your decarbonization. That's kind of the mantra. So we thought it would be important to look at the future to figure out whether China producing at the same speed as it does now with the same kind of fixed asset investment growth, and given this demand, whether you could still argue that overcapacity will pile up. That's why we wanted to look at the future, so that this argument that it's only now, don't worry, would not hold. The answer is it doesn't hold. Their overcapacity will continue to increase because China will continue to produce beyond its demand and the world's demand. It's kind of the biggest, if you want, finding. So again, even with more aggressive transition scenarios, China is capable of feeding the world's demand for renewable power equipment as well as decarbonizing. Now that's basically, the calculations you have here. What are the consequences? And again, this is why we wrote this paper. It's not really about, okay, should we all be happy about this? Maybe, but the Chinese economy might not be happy about it, which is the whole point. It is actually distorting the economy, creating overcapacities that are not needed without really having the final demand there, even in the best of circumstances, when everybody complies with net zero targets. So first of all, there's been a lot of front loading in China. This is one of the reasons why they will peak by 2030. Huge front loading of renewable installation in solar especially. And you can also see that this might have been a consequence of some, well, two things. First, maybe we're late, the rest of the world. Secondly, maybe we're becoming more protectionist, meaning, some countries, obviously the US in more than anybody else, but also some emerging economies are importing less. And you can see there that the share of exports versus domestic has changed much more towards domestic use of China's renewable production. So the front loading might have been a consequence. I mean, causality is very hard to prove here, but of the fact that they couldn't be sold and that the overcapacity was piling up. So that may have kind of fostered the faster installation. So overcapacity has emerged since early 2023, where both exported and installed capacities increased while prices started. So it's hard to measure this in volume. I mean, we have, of course, measures of overcapacity, and maybe Max, you will talk about this later. But, I mean, prices are plummeting. Yeah, and you can see volumes are, especially in solar, continuing to increase, and prices are plummeting. So I think that's probably the best sign, or the most convincing sign of this overcapacity. But you can also see Chinese Chinese manufacturers' capex remaining very high, but earnings faltering. So this is another signal. So they keep on investing. Why do they keep on investment if their earnings are falling? Well, because they might have to, because they have some subsidies out of this production, because they are asked to produce, and also because earnings are falling, but they're still higher. We have a report actually, Haoxin cannot speak, it's a pity, but showing so the green tech industry in China is losing steam in terms of revenue, profitability more generally. But it's still the most profitable in China. That's the point. There's nothing else you can do. I mean, maybe there's a few things you can do, but basically, yes, it's not looking good, but the rest is looking worse. So that is quite convincing as an argument to keep on doing this, even if you still create overcapacity. So you have there a lot of companies. This is a list of listed Chinese renewable companies. So we look at capex and operating income, and you can see that operating income in 2023, especially 2024, has come down aggressively. Thanks God, sorry to say this, I shouldn't call on God, but anyway, it's fashionable now given what's happening in the Vatican, so I leave it there. Anyway, I want to say that, thanks God, again, that capex is coming down. I mean, that at least there is a recognition that you should not be increasing capex at the same speed. So this is as a share of fixed asset investment. Yeah. One thing important to note, most people think this is like the industry in China, and this is quite wrong. It's actually quite small. But it is contributing a lot because it's the only place where capex is growing very fast within the manufacturing sector, and let alone if you include real estate and infra, even worse. So the contribution is quite large, but the share is small. And this is just to show you that it is kind of the sector where where capex is growing the fastest. And this is the infra lag. So this is the key point we want to make. This is a capacity and generation. So you can see that basically, despite higher share in power generating capacity, the actual power generated from renewable sources remain minimal. So they're just not hooked to the grid, these renewables that China is installing. So it's quite surprising. And we checked actually with the industry because we couldn't believe it. But the problem is the grid is not ready to absorb all of these renewables. And I think this is very important to realize that that this is where China should be investing. Now, why would China not invest in this if there is a need to invest? Well, because this is all public money. Yeah, and frankly, I mean, we know what is the state of the public finances in China, so we think it's harder to. Yes, my mic. Sorry, I will keep it close. Okay, so this is why we make this very strong point of the need for an infra catch-up, which is a huge investment opportunity for China. Not that they have many. Again, margin is low. If this is the best sector, imagine. Yeah, so why not invest in green infra, which is the title of our paper? It's very hard to understand why this is so difficult, but the reality is that there is an underinvestment. I mean, put it this way, they would need at least 530 billion every year to really put the grid to work as needed to really absorb those renewables that are installed but not hooked, if you want. And that would contribute about the same as what the renewable production and installation contributes today in terms of fixed asset investment and contribution to growth. So this is why we think that this would be a solution for them to reduce that overcapacity and, frankly, a lot of problems for the rest of the world, because the issue here is that with those falling prices, China will be the one and only producer of renewables globally if we continue like this. And that's something I think the world cannot accept. And these are things that I'm sure that you've discussed in China, that why not have a single producer if there is huge economies of scale and every country can benefit from lower prices? Well, first, because maybe these companies, I mean, they can continue as long as somebody can subsidize that production. What if suddenly, this doesn't happen? What does the rest of the world do? Or what if we're stuck with the wrong technology? Because that's everything we have. And China cannot invest in addition, it's not competing with anybody for a better technology. So I think there's many reasons why you wouldn't want to have a single producer globally. So anyway, these are the calculations of how you match. So if you reduce capex to the level of not having overcapacity, this is what we calculate, the renewable manufacturing would contribute 0.3% less, okay, to fixed asset the growth of fixed asset investment, which is the bulk of the growth in China for that matter. Then renewable installation minus 0.7, and all of that would be kind of substituted by that green infra. So that's why we think, why not? So why yes is basically mostly geopolitical. So everybody knows China faces enormous headwinds. Why not reduce the pressure, producing less of these renewables? Green dominance has disrupted overseas markets. Not everybody's happy with this, including Europe. I mean, yes, it looks, I agree, this is something Jeremy and I also discussed, that you could argue that some countries may be fine with cheaper and cheaper renewables. But let me also tell you, and I think there's some people from India connected, yes, but not, because you also want to produce. You don't want just to import. And that is something that I think has to be understood. Maybe for very small countries this is not an option, but I think for many countries it should be an option because the cost of production is not so high. And here is just all of the measures of protectionist measures that have been taken against Chinese green products. I don't want to mention they're not only Western, also in the emerging world. And I think basically the idea is pivoting from export markets to domestic infrastructure. Seems like, a good thing to do given the pressure, beyond all of the benefits of doing this. So all in all, just to say that this paper is basically trying to make an argument that no, we're not short of renewables. No, we aren't. Actually, if China continues to produce at the same pace, the overcapacity is guaranteed, even in the best of circumstances, everybody, fulfilling its decarbonization targets. So why not do something else? What is that something else if China wants to continue to grow green infra? Not only because it reduces geopolitical tensions, but also because China needs it. And that's all from my side. Thank you.
Okay, you're now the chair.
Oh gosh, okay, that sounds like a lot of work for me today. So who wants to start? I don't know. Max, maybe, since I mentioned you quite a few times and your work, you can start. Yeah.
Yeah, so thanks for this and thanks for the invitation. So I mean, I like the thought, I like the idea, but I'm not very optimistic that's gonna be listened to much in Beijing, and maybe I would like to illustrate like why I think that it will be the case. So, and I think first of all, first in a European context, and you already mentioned about this. I feel there's going to be less external push on China for this, because so far it's still going to be an entry point to engage in at least those who want to hear it in Europe, that China is going to exactly be that, what you mentioned, bring the price down, help us to achieve carbon neutrality or reduce CO2 emissions. So this is a very strong partnering argument. And I think the same goes to other parts of the world that still believe in climate change, which I also, at least outside of the US. So China is going to continue to use this argument that they are the ones. So if it makes economic sense, is a whole different one. So that's the external view on things. But as this paper is also, I think, mainly about the Chinese implications, I think it's also part of the Chinese mindset at the moment, at least in the current leadership. And what's illustrated in green tech, even though we are attaching in Europe also different emotions and analytical thinking to it, to the green technology aspect, is that this comes down to the economic system competition that we're looking with China. China excels in building up rapidly capacity, bringing down prices, and profitabilities and margins are secondary. Even though you mentioned green tech is still one that is still performing better than others, but that's not necessarily a reflection of strength. And this increases the pressure everywhere else to even think about reducing dependencies, because they come with a cost. So in its attempt to expand industrial dominance, China is accepting the economic costs that come with it and what that means for the well-being or welfare maybe for the state, and maybe making an economically sensible decision. This is, in the short term of things, not a priority, because if your aim is to build industrial dominance, you're going to be fine with that. You're gearing the financial system towards providing capital and enabling companies to go through a period of thin margins or even no profitability that would not be possible here. Markets would be, very harsh on these type of companies. So I think that's a problem. And then you bring in the element of the geopolitics that you mentioned also here, is the shift towards strengthening economic security. And in China, again, they reflect strength through manufacturing dominance. And in green tech particularly, it's building up a energy dependency, making it very difficult for other countries to reduce this type of dependency. And I think this is also relevant to kind of think of like, how did the green energy sector become so important in China? It's at the intersection of industrial policy objectives and other national security objectives, in this case, reducing energy dependency that China had. So this kind of brings all this together, and hence this being such a high priority sector, I think at this point there is very little reason to make these type of adjustments. Now, it's kind of, and you mentioned it before, it's kind of the same as hoping that China will shift towards a more consumption-driven growth. At this stage of where we are in the world, I'm not very optimistic about that. But maybe to end it on a little bit of a positive note, there is something particularly Europe could do as one of the, at least if we're still in the position of being a major market for China, is to maximize basically the economic pain that China is willing to absorb by itself, but just making it even more painful by making it more difficult for China to export outwards its overcapacities. But of course, this comes as a price for Europe, so I question if we will be able to tolerate that. But if you basically make it or reduce the external demand and increase the cutthroat competition that is in the Chinese market, and that eventually leads to companies exiting the market, maybe that will lead to such a scenario where then also infrastructure is seen as or building up infrastructure is something that can come forward. So I would not give it up entirely, but I think at this point of the conversation, I think the emphasis is going to be more on partnering with China in the green transition, which again makes me a bit more pessimistic on that this will actually happen.
So that's wonderful. Thank you, Max, for the comments. So basically saying it's not going to happen. If anything, maybe some companies are destroyed out of low margins. Okay, so let's hope for consolidation, maybe. But I'm not sure consolidation is going to reduce overcapacity massively, because that hasn't happened in other sectors, shipping industry, you name it. So anyway, I just want to mention that you can write, except for those in the room, you can ask questions, comments on Slido. I think the word tends to be China for this type of seminars. I hope I'm not wrong. If not, somebody should help me out with this. Yes, China. So with that note, with that word, you can post your questions and we can check them later. So I don't know. I have here Ben and Max. You were the last. Sorry, I didn't check the list. So Ben, you, and then Jacek. Is that okay? Okay. Yes.
Thank you. There's also another microphone here. Just
No worries. I give the mic. That's okay.
thanks, and thanks for the presentation. Yeah, it's an interesting and compelling idea, and it makes a lot of sense intuitively. Yeah, let me ask some questions and try to challenge it. That's the fun of the fun of it. So I think if I try to put my hat on as being a Chinese policymaker, the two takeaways from reading it that needs to hold are overcapacity as a problem, and grids are the solution. And yeah, on both, maybe some thoughts. So on the overcapacity, I think, first question is on the demand side, where certainly using the net zero scenario from the IEA is smart, and I think that's the best thing you can do. It's still hard to predict demand. The IEA has kind of become a meme for continually projecting solar PV like this, and now we're out of the building for how much solar PV has been deployed. So, I think there's always upside to these projections, and especially just thinking about energy. I mean, a world in the future with cheap green energy, there's a lot of things that you can do with energy. You can pull carbon dioxide out of the air, produce hydrogen, put them together, and create green kerosene, green aviation fuel. It's kind of a pie-in-the-sky idea, but there's a lot of these pie-in-the-sky ideas that if the price of energy continued to crash, and if you continue deploying, it's possible that the demand, it's a function, and the demand responds and also keeps picking up. So yeah, there's obviously some uncertainty there, and it can't be taken as a given, especially in kind of emerging markets. You could imagine a big boom in energy consumption in a world where we get cheap green energy. And then maybe on the supply side of those projections, a little bit green tech and renewables has been used interchangeably. It's solar and wind which have been focused on here. Of course, there's other green. Electric vehicles is topical. Batteries, even things that aren't big today, something like hydrogen, maybe is not going to be anything. Maybe it is. Electrolyzers, many other kind of green techs that solar and wind aren't going to do everything, and the nuclear, there could be kind of things around there. So again, for China, that if I was in the Chinese policymaker hat, maybe I'm thinking, okay, we've done solar. There's nothing else left in solar. What about these other sectors? Might be an approach. And even within solar and wind, there's new generations of technologies. But there's a current generation of solar panels where China has a lot of capacity, and kind of the conventional wisdom from industry is that these are going to be phased out for new ones with kind of tiny incremental efficiency gains. But because with solar, now one of the big problems is just land availability. The tech's so cheap, the biggest cost in your project is getting land and getting this connected. And if you can get kind of a 5% increase in your output, it can be worth paying a bit more for this tech. So yeah, just some general thoughts on the projections, and then on whether grids are the solution. I think they must be to a certain extent. They're so important. We have the same conversation in Europe, and they're really important to get deployed. It's very hard. We also find in Europe with this idea of a hydrogen network, trying to build an infrastructure out for, it's a little bit easier with electricity because it's a little bit easier to project demand and perhaps supply. But building these out is hard because you don't know where demand's going to come, where supply is going to come. Geographic variation, temporal variation will will demand move towards supply, for example, is a question. And you build these big connecting lines, and actually you find the demand is actually moved away. So yeah, it's clearly hard for planning. And then maybe the last point on specifically on the graph where you tried to make this connection that grids can be the enabling factor. I think there's my word is gone now for curtailment rate. So curtailment is like the technical term, and this is when they're actually turning off solar and turning off wind. So I think in Germany now it's something like 2-3%, and it's growing. And I think if you were able to get statistics on the curtailment rate in China of these techs, that would be the really convincing argument to point out that this is holding. And because it's a very technical question, a very hard question to completely say that grids are the problem, right? It's there could be, but the curtailment rate I would suggest looking into, and more thoughts, but I save them for later. Thanks.
Wonderful. Curtailment rate. Okay, I'm learning. So I think, I won't summarize. This was excellent. And Jacek, I'm going to try to pronounce your name. No, maybe not. Okay. Thank you for that. Okay, the floor is yours.
Thanks, and thanks for the very interesting presentation. So maybe I would start with this partnering argument from the perspective of the policymakers here. I would say that on the one hand, there's a increasing recognition that China can make net zero technologies not only cheaper, but often better than us. Clearly EVs. Also, we see that this in wind, for example. So there's this tendency on the one hand to increasingly partner indeed with China. And you see increasingly foreign direct investments from China here in Europe in batteries, where there are joint ventures with European companies. And we are, a big debate right now is what conditions we impose on these investments so that they really benefit the economy here and resilience and so on. But on the other hand, there's, I would say, from a policy side, an increasing pushback against that overcapacity. And, a few, 2 years ago, we had the Net Zero Industry Act and easier state aid rules to support manufacturing here in the EU. Then recently, we had the first time an ex officio investigation into EVs from China, and then imposition of tariffs. And it seems to me that it increasingly goes in that direction at the same time to kind of confront China on this. And I think that once the impact on established sectors like cars starts to be really negative, there will be a big pushback against that overcapacity also in other sectors. And so the question is really, with this partnering argument, can we do it? Do we have the means to fight that overcapacity through the tools that we have? And so I mentioned the Net Zero Industry Act, I mentioned state aid rules. The question is, should we also use to a greater extent trade defense instruments? But that's difficult because you have the impact across the supply chain. If we now impose trade defense instruments on batteries imported into the EU, how that affects EU producers of EVs. So that's one reason. Second, there's always risk that we see of curtailment, simply investments going from China to Malaysia, to Indonesia, and then coming to Europe. And this is also a massive trend that we see. And, there are tools probably to deal with that, for example, dealing with rules of origin and so on, but it's, again, complex. So all this to say that, if we could have this kind of a grand bargain with China, we will not be applying to you all these tools, trade defense, and so on. And we will, to some extent, also welcome under certain conditions your investments in Europe through joint ventures with European companies, but please curtail that massive overcapacity and shift the investments elsewhere. I mean, if we could convince them, that would be great. The question now from me as a policymaker is how we can do it, and linked to that, to what extent China has the tools to do that. And here I have not a sufficient knowledge of how the Chinese economy works. And for me, it's really puzzling how come these companies that operate at a loss, for example, in solar right now, are not going bankrupt. I mean, they are still competing with each other. And I hear different voices. Some analysts say this will continue, overcapacity will continue for years to come, like Bloomberg says it. On the other hand, you hear that there will be a degree of consolidation because they just cannot all continue operating under this condition. So I wonder to what extent the state plays a role in that, subsidizing those companies that are operating at a loss. Is that happening? And if that's happening, to what extent they can, shift those subsidies from that sector and invest them productively in, as you say, grids development. So I don't have a clear idea there. Thanks.
It's really good to have you here, Jacek. Really, I can only tell you how, because Max and I, we look at each other and we kind of get that policy view, how wonderful it could be. The problem is, we're not yet there. And we can talk later why we're not there. I mean, that your surprise is absolutely on point. But I think I mean, how would I put it? But also, after many years, our lack of surprise is also on point because there is this inherent contradiction. We can talk about it later, but I just want to keep the tension there. And before I go back to, the discussions, I really don't want to make people wait. If you have questions, please ask. Use Slido. I'll repeat, China. Yes. China, and any questions should come. I don't know whether I'm looking at the right place, but the floor is always there for those who come in person first. So, any questions? Yeah.
Thanks for the panel and for the ideas. Quite revolutionary, I should say. But let me ask you about because for me, maybe I'm wrong. The idea is just of production for China is one idea, and then to getting cheap energy is a kind of an independent idea, kind of two separate ideas. And in terms of the energy prices. So I mean, you're saying that investing in the grid and the prices of the renewable energy is quite low, but if comparing to the other resource which China apparently has, I mean, quite cheap Russian still oil and gas. So how it is comparable to those prices, and if it is comparable. Or still, they have the resource of the Russian oil and gas, which is, I think, it's one of the few markets where Russia can export. Still, it's fossil fuel. So, do they have real incentives to invest in the grid if they have almost the full control over Russia? Getting their gas, oil and gas, and obviously the geopolitical leverage. And I mean, does it create any economy sort of surpluses for China? This approach. That's just my curiosity. Thank you.
So that's a great question. Maybe while we get others, I'm going to get straight to that, and then we can talk about the comments. It's a great point because when I looked with housing, who's probably there, and housing. Sorry if I'm making many mistakes. I feel really bad that you can't speak, but you can note all of my mistakes and then tell me after this meeting, after this conference. But on this one, when we were discussing about the speed of the renewables, which is 80% by 2060. But there are countries in Europe which are well ahead China already, and it's kind of contradictory, because you have the renewables, the prices are so low. As far as I can tell, but again, I'm not an expert, lower, actually lower. So why do you keep that coal? Why do you keep that oil? Why do you keep that gas from Russia? These are political economy reasons. I don't think China wants to, well, first it has infrastructure bottleneck to go faster, which probably requires resources that maybe are not readily available. That's one. But beyond that, I don't think China can cut on coal. And, you know, if you recall, China actually announced, this was maybe 2017 or so, maybe Max should remember better, that they would not build coal stations. I don't know if the word is station. That they had a commitment not to build those stations overseas, in particular in the BRI, and that was, you know. But for the first time this year, China is exporting more renewables than coal. So if you think about it, well, from not building any coal station to actually, I mean, I don't know what that means, that you don't build them, but you export coal. I mean, so in other words, the economy of coal is very important in China. It's clearly, I mean, we have here Robin, who used to work with us, and who's done a lot of work on the incentives of local governments, and you can just see how important in the northern part of China coal is and why it has to remain there. So that is domestic, and I think for gas, I mean, it is obvious that I think there is this tension, yeah? Enough to have Russia on my side, but maybe not too much to depend on that, because China does not want to depend on Russian gas either, fully. So this is the political economy. But going too fast into renewables may not offer China the opportunity to have that leverage with Russia. Not too much, not too little. That's I think, how China runs its energy policy. And if it has to now dump Russia for shale gas from the US, it might. You know, I don't know how it will end. But the point is that these are really more than efficiency reasons, price, etc. These are geopolitical reasons in China's energy policy. Yeah, so that would be my response. Any other question before we go back here? Go to Q&A. Yeah.
Hello, my name is Andre Boggio from Hanover Communication. So I have two questions. One is first regarding the numbers that you showed in terms of the expected energy peaks from China and also from the rest of the world, whether or not those numbers, for example, accounts for the ramp up of energy demand from AI data centers that, as we know, they are ramping up as crazy and might change a little bit the dynamics of demand and supply of energy and green tech in particular. And the other question is more from for Janusz from the Commission, in terms of there seems to be a bit of a disconnect from towards China. On one side, trade defense measures to try to limit a little bit what China is, the production that China is sending to the EU. You mentioned that the investigation in EVs, not on batteries, for example, just on EVs. But also on the other side, there seems to be a lack of the other leg, which is the support measure for the European manufacturing. Of course, the Commission now announced that they're looking into it in some sectors in particular, but it seems to me that there is a bit of disjoint nature of these two measures. They're not really communicating well with each other, which still leaves open the fact that we are just increasing dependency in the meantime from China. And the more it goes on, the less likely it is that we can decouple like it's happened with Russia. We were supposed to cut off Russian oil and gas 2 years ago. Of course, it doesn't happen. We have now a new strategy. It still will not happen because there will be ways where some sort of energy from Russia will still happen. We are getting the same situation with China. How do you see this play out? And if there's something coming up from the Commission that you think really might solve a little bit part of this problem?
Okay, so the question goes back to your point on, I wrote here something like, you didn't use grand bargain, but maybe, yeah, so maybe I can put it that way. So can there be a grand bargain with China? So we need green energy, but we don't like your overcapacity. Your point is, even if, you're not even talking about overcapacity. It's like, if we need green energy, are we not becoming too dependent on China, basically, in a nutshell, yeah? And I'm not an energy expert, but every time this point comes up, maybe Ben should cover this one, is, this is not the same, because once you have the solar panels, once you have the wind, turbines, that's it. You don't need China. Is it so easy? It seems to me like. So Ben, can I give you the floor on this one? Because it is so easy. Don't worry. Once we have them all, we're done. But it seems complicated to me.
Sure. I guess it's more nuanced, but I would, not so easy, but it's easier, right? If you have a sudden disruption to the import of solar panels, it's not that somebody cannot drive their car to work, somebody cannot heat their home, which is how it was almost with the Russian gas, right? If we didn't have alternative gas supplies, then you cannot turn on your cooker. If you have a solar panel on your roof and it's already there. So, one's a capital good and one's an energy flow, and they are different. From an energy security perspective, economic security and overdependence still holds, but I would argue they're quite different.
Okay, so I'm going to put wood to the fire. This is Charles Barton, a famous piece on IoT and the idea of China being able to control. It sounds like science fiction, but I'm just saying, I didn't write this piece, but several did. These others in U.S. Academics writing about the fact that yes, but the ultimate control, is that true? Is that true, that the ultimate control of those solar panels might actually be beyond your control as a nation? Because that makes a big difference in terms of security, economic, national, energy, all kinds of security. So,
no, it's a different risk. I think in the FT about a week ago, there's an article in America. It's just one article. It's hard to know exactly, but they found some switch inside the inverter, inside the solar panel, which theoretically could be controlled. So in terms of cybersecurity and digital risk, it's definitely a new risk that's emerging, and I completely agree needs to be monitored closely. I'm not sure if that's, that also can be an argument for understanding the components and, for example, different parts of the solar panel. Some of them are the parts that has this digital connectivity, and you could look into. I don't know enough more to comment exactly how they work, etc. But it's definitely a risk, and it's one people I think are thinking about.
Your question is so good, because I'm drilling Ben now, because I'm also the chair, so I can actually switch. Ben, one more on this one. Where is the data stored? This would be true for electric vehicles. Where is this data going? Is Europe using that data that our solar panels and electric vehicles, say, produced in China but running in Europe? Where is this data?
I don't know. It's a very good question. I would assume the TSOs and the DSOs, so the grid operators, would be my assumption. I'm pretty sure it's not. I'm pretty sure when European producers are buying solar panels from China, there wasn't this. They didn't sign up to the deal that the data's going to China. A bit like Facebook, everyone else. Maybe it is, but I don't think that was on the terms and conditions when they did it. So I think the assumption is it's staying in Europe. It's with the companies who run the grids. Yeah, what's actually happening, I don't know. Anyway,
that's to expand on the issue of not only like manufacturing independence, but also like more permanent, if you want, in terms of security. But going back to the question of what should we do, and here I changed the hat, sorry I have too many hats, but very quickly, let me tell you why it is so hard, and Max, I'm sure you can add more wood to the fire. It is so hard to get to that grand bargain. And now I'm going to put the Chinese hat here. So basically here is Europe, 55% of my market for EVs, and you name it on the rest. And I basically my margin for every single EV I sell to Europe rather than domestically is double at least. So I have surely any of those companies have a preference to export. It's just that maybe they didn't recently because they couldn't, but not that they didn't want to. They love exporting because their margin is just higher. So now you tell them, okay, unless you produce, so what's the deal? I will lift the tariffs on EVs in exchange for you reducing overcapacity. But actually, if you lift the tariffs, they have much more of an incentive to export rather than produce in Europe. You see what I mean? Because it is much better for them to do so. So the incentive structure is put as many tariffs as possible. I mean, I'm just saying, if what we want is them to produce in Europe, tariffs are the way to go. I'm not saying we should, but the incentive is exactly that, because if you lift the tariffs, it's much better for them to export. So now, can you just say, look, I don't impose any tariffs, I trust you, please reduce your overcapacity. This is kind of the idea with van der Leyen that, you know, they will Li Chan thinking of an instrument that measures overcapacity. I mean, I don't know. I don't think this is feasible. Firstly, because maybe the overcapacity shifts from China to Vietnam, and then you cannot count it, or it's not in the deal. So, I don't know. I'm just saying that great bargain looks very difficult to me because the incentives are not aligned. China's best option is to produce domestically because that's where they need to create the jobs, that's where the companies make more money, etc., etc. I don't see why they would want to produce here other than because they fear the market will close. So that's kind of the thing. Max, any views on this?
When it comes to hoping for a grand bargain, I also wouldn't be too optimistic, and I think this also has to do with, like you mentioned, the mismatch of incentives at the moment. And most likely, I mean, there will be a lot of appetite to talk about a grand bargain and make promises, but as the incentives don't line up, I think it will be eminent to, from day one, basically have a evaluation system in place that would have an impact on how any such bargain, if we would come to an agreement, would be implemented, because I just don't see a change of mind in China apart from their best attempt to keep Europe as open as they are. And I think this incentive, I mean, we've seen it playing out in the EV tariff debate already, how, you know, China was eager to maintain the openness and access to the Chinese market. And I think that's a bit of a special case because there's a big component of European producers in China that also were on the side of you know, using China to export. So I think in this regard, wouldn't be optimistic of a bargain, or I'd be very cautious about any offerings that would be put on the table that would provide less incentive to reducing capacities within China or investing in Europe to build up these capacities.
Okay, so any questions from the floor? If not, we can read the question out there, which is a very hard one. So if you have better ones, not better, but easier ones, they're welcome. Let me read the question so that you can help out. What should be the EU's short-term answer to China, especially within the framework of the European Green Deal and its push for digitalization? So, Jacek, this is going to come back to you, but anybody wants to add any question before we give Jacek a time to reflect? Okay. Theo.
Responding to Chinese overcapacity, why we would try to sort of slow down their strongest point and take on China where it's most strong. This is one of the global innovation hubs. I mean, why wouldn't we pursue some of the next generations of renewable technologies, like Ben was mentioning, instead of taking on China or trying to take on China where it's strongest. I feel like in some ways, and this is maybe a little naive, but I do feel sort of like we're fighting for the past. We're even sort of fighting for the present, but we're not fighting for the future of these emerging technologies. We're not fighting hard enough. And so I wonder that if there's a wave coming at us of this overcapacity in solar panels and wind technologies and in batteries and EVs, why are we trying to go right at it instead of going under it, instead of going over it? Why are we taking on China where it's its strongest instead of playing to our strengths and focusing where we have the advantage?
Great, Theo. Just, I'm going to maybe go to Ben, but anybody else. But let me tell you that when Ben said, electrolyzers or nuclear or hydrogen, it's not that China is not strong at all of that. Maybe you're right, we're talking about the past. I think it, frankly, is because you have numbers. You know how much China is exporting. I mean, you see that. But that doesn't mean that we should not use this as a warning of what may happen. In other words, maybe we should not focus our policy decisions on these sectors, but we could draw lessons for new sectors. Maybe I would put it this way. By the way, this paper is not whatsoever about EU's response and so on. This is the discussion here. It's mostly about, in a way, showing that, as you said, maybe you can say China, this is China's biggest strength, but China might actually be, in a way, cornered because of its biggest strength, because it's going to end up having huge problems if it continues to focus on these sectors. That's kind of the message of the paper. But not to say that we should focus on these sectors, if you see what I mean. We're having this discussion here. I think you're right. We should focus on the future sectors. But I don't think it's going to be very different. It's going to be the same. But Ben, you know better.
Agree. And the EU has its hydrogen bank, which auctions for producing hydrogen in Europe, and it's had a first round. It's going to the second round, and now they add a clause for where the electrolyzer comes from because they all came from China. So, but I still agree. I mean, I find in a sense, something problematic about the Net Zero Industry Act, which I think many people would share, especially as economists, is this notion of a blanket target for all techs, this idea that Europe should produce 40% of everything that's defined as clean tech, and I think there's like 17 different clean techs. Producing 40% of solar panels in Europe is going to be extremely difficult. Producing 40% of wind turbines probably already happens. So yeah, there's a lot of nuance, and I think for the Commission something pretty hard that they set on now, this document that they're supposed to aim for this 40%. And yeah, I think if Europe really wants to be competitive in a future world of clean tech, that's not the strategy. It has to be about comparative advantage and specializing in certain areas, many of which can be services and technologies. There's a lot of solar jobs in Europe. They're just not making solar panels. They're installing solar panels. And in the past, when the EU put tariffs on Chinese solar panels in kind of 2012, I think it was, a lot of jobs were lost in Europe. We didn't really get many jobs for manufacturing because we still weren't able to compete. But in Europe, the deployment of solar shared and lots of jobs were lost. So sometimes there's this quite narrow-minded view on this manufacturing, and it needs to be broader. I agree. And it's very interesting listening to this conversation of what can be done with China, and this like using the market access as the tool really comes home as I struggle to see what else can be on the table, and it's kind of a shame. I agree, especially as a clean tech working in this space, putting a tariff on Chinese EVs. I find it sad and hard. I mean, we need to accelerate EV deployment here, but without arriving at this grand bargain, which I understand is so complex, I really struggle to see what tools Europe has available other than limiting market access and using that as the carrot for China, basically playing with the tariff levels or however you do it, which I feel a bit pained to say, but I also struggle to see what the other solutions are. And this is on this question, what's the short-term answer to China? But doing selectively, which the Commission is doing. So in solar panels, about a year ago, there was big pushes for tariff on Chinese production, and they were resisted, which I think was a smart move. Whereas in electric vehicles, they were implemented, which in my opinion, also is smart because it's so crucial for the European way of being.
Yeah, I want to go back to Jacek, but maybe we should frame this question as to what do we want, not so much. Sorry, I know. I'm sorry. So I'm going to go back to Jacek. And I think the question is not so much whether what we want is feasible, which is the second derivative, maybe that's for Max, whether China will accept it. But the first question is, what do we want? What should we do? Should we, let me give you a few options. Should we use, as you said, our toolkit and kind of, as you were saying, Theo, like didn't use hit, but nor contain. I can't remember your verb, but anyway, like kind of make it harder for China to enter our market. That's one. If we want to decarbonize, what is the alternative? Can we produce? Isn't it too expensive? So maybe that's, you tell me. The other one is we want them here in JVs, but under which conditions? And the third one, I don't know, maybe there are more, but I can think of three. We contain, but we don't know what to do after we contain. Second, we invite them in, GVs. Do we want to impose GVs or non-GVs? Simply, greenfield investment, and they control these companies, or GVs. So you tell me what we prefer, or what the Commission prefers. And third is status quo. We let them in as fast as possible. We decarbonize as fast as possible, as cheap as possible. So what do we want?
Thanks. Well, in terms of what we want, I think indeed there's often some confusion in the public debate because there's the security argument. We want this produced here or diversified because concentration creates risks, and we see that it does create risk. The other argument, we want to scale up this production here because there's an economic argument because these markets are so massive and will triple in the next 7 years or so. And of course, depending on where you put more emphasis, then your policy toolkit changes. But just I would like to maybe link to what you have said about these sectors where we should maybe let it go and others invest more. I think it's a false idea that there are some niche technologies where we can still excel, and there are these massive commoditized markets like batteries and solar where everything is gone and we should just let it go. It doesn't work that way. In solar, in batteries, there's constant innovation. Yeah. And so if you look at batteries, there are the new chemistries, but even in existing well-established chemistries, cheap batteries, LFPs, there is constant innovation allowing longer range, shorter charging, and so on. So, and batteries, 85% of the investments in net zero technologies will be in batteries. So can we really allow ourselves not to have this market if we want to have a strong EV market? And I think the answer of the Commission is we can't. And so what do we have to do to have this market here? And I think if you look at overcapacity, but that's my personal view, and indeed I see these estimates, including yours, that overcapacity will last for years to come. I think it will be hard to get by without some kind of trade defense instruments. But this will not be enough, because if you look also at what's happening with our domestic manufacturers, of course there's Northvolt, which was very traumatizing for everyone. There was a series of management mistakes that were made, but there's a number of emerging other EU manufacturers, and they all struggle, and they all need rather substantial support. And so we have to find the money to support them in the next 5, 6, maybe 7 years through, for example, OPEX, something that was anathema for state aid rules so far. So we have to have defense, we have to also have this positive agenda, and I agree, without innovation, research, and so on, we will not be able to compete. So we have to find a way of linking better our massive, programs such as Horizon with the industrial deployment, because so far, we invent all these things. Solar PV, it was done in the Saxony, in Silicon Valley, then everything is lost once it's scaled up. But of course, there you have broader questions of capital markets and so on. So there's a lot of things we have to do, basically.
Well, that was quite good. I have to say, I agree with both the defensive and the offensive, because defensive without offensive goes nowhere. So thank you for answering that question so clearly. Any other question? Yep.
Just to follow up a little bit, first one observation when talking about batteries, not to forget that there's not only EVs, but also battery storage, as we started at the beginning, which is probably has a better growth margin coming in the next few years, and where actually Chinese are now starting to be more competitive than everyone else on a price comparison that's even worse than EVs, so they will probably need a bit more support. And the question is that, I mean, welcome the Commission opening up to OPEX support through state aid, but it seems to me that the discussion is still not fully developed. Every manufacturer you talk to in any green tech keep mentioning the US Inflation Reduction Act as the gold standard of what's actually needed. And from what is my understanding, that's not really something that's on the table within the Commission response or from member states that would allow. So if that's not the solution, then what is in order to provide OPEX support?
Yep. Yes, absolutely.
It's on the table, definitely. The Commission in official documents, the recent automotive action plan said that it will explore the possibility of providing direct production support as part of the innovation fund. So that's definitely on the table. As part of the revision of the state aid rules ongoing, also it's on the table. But of course, there are, as always in policy, difficult trade-offs because OPEX is very distortive. And in the context of the single market, we don't want too many distortions. So if there's OPEX, it has to have some strings attached. There's the state aid rules that are being revised. Let's see what the Commission will come up with next month. The Innovation Fund. And there's the Competitiveness Fund, which, again, my bet is that it will be more flexible in terms of the type of support it can provide. But, you know, in the end, it will be an EU tool, and the EU budget is limited, and all this industrial policy is very expensive. I mean, we talk about hundreds of billions of euros in subsidies, and so ultimately, the bill would have to be footed by member states. So I think state aid is the key thing to look to what's happening there.
Okay, so basically to your question, I mean, so maybe I'm distorting it, but just for those listening. So the US was facing the same issue and they just said, you know what, I'm going to spend money. IRA. Now, I would like to go to Ben to tell me, was it successful until Trump came to power? Because that's quite important, because if it was not, you know, why bother? But if it was, yes, we should bother. And then, you know, all of these things you just mentioned hopefully are enough, and if not, we need to come up with something, yeah? But I think knowing whether that is the way, for me, is quite important. But then on your answer, I think the one thing I'd like to note is that, and that's why the US is so important, is because can you really compete with the state capitalism? You know what I mean? Like, I mean, we're talking about the EU budget here. And Max and I know something about the Chinese budget and something called economic affairs. Economic affairs is basically the biggest, item in China's fiscal expenditure. So just compare the EU budget and the tiny thing to China's biggest fiscal item, let alone local governments, you know. So basically, wow, you know. And on top of that, you just said it, you know, Northvolt, well, it had to go. But in China, it wouldn't have gone. Let's face it, never ever would have that company default in China. it would have re-emerged for the sake of it, you know. So that's also the problem, that we are competing with a very different system. So that's why Ben's answer is so important. Ben, what about the US?
Yeah, I think, you know, the Inflation Reduction Act was not very good value for money, at least on the manufacturing side. It was an extremely expensive way to try to push projects, and we mostly criticize Europe, but I actually think the approach in Europe is we get much more value for money, and with the limited resources we have, we push projects much better along. I mean, the Inflation Reduction Act, for example, the subsidy you could have for manufacturing solar panels in America exceeded the cost of production of a panel in China. So the subsidy was larger than the total cost of production in China. I mean, this is really not a smart policy. And I mean, we have some research with a group in rhodium, and I mean, in battery production at the moment, the EU has the same capacity as America. 3 years on, America has spent a lot more money. The EU still has the same capacity as America. And yeah, if the Democrats had stayed in power, maybe this would have kept going. But now what's going to happen in America? The same for EVs. A lot of money has gone in America. The EU, we have some data coming out this week or the next. The EU is still kind of keeping pace with America. So I think it's often not as clear as the IRA is amazing, and this is what's driven everything. Maybe then on Europe, if you could design it smartly, what would you do? I think what you would like to have is competitive auctions of money for clean tech projects across Europe, which conform to some criteria, conform to decarbonization and reduce emissions, and also try to create growth. And it was already mentioned, we have it. We have the Innovation Fund, and for me, that's perhaps the most exciting vehicle we have in the EU for supporting such projects, and particularly this notion of commercialization. In Europe, we have very good research, and as you mentioned before, with solar panels, for example, but commercializing them and building facilities here. So for me, the most kind of concrete thing that can actually happen is the Innovation Fund, the shift to OPEX, using this money smartly, and scaling up projects around Europe, which I think is exciting. And maybe another area related, and it's about this: how do you get European money through how do you get national money through Brussels and through some kind of fair European scheme? And here again, to raise is the auctions as a service, which is another idea. So essentially, the Commission runs their own auction, for example, for hydrogen, and then as member states, you're allowed to come and top up with your own money and push it through this thing. So you try to bridge this impossible square to solve of how can you let governments support their own industries and still preserve the single market, and if that's really the key right here. So I think there's some ideas on the table, and yeah, the Innovation Fund I'd be particularly excited about, and I think that's the priority. How can you ramp this up and perhaps give it a few more? It gets a percentage of the ETS, so the carbon revenues that's raised in Europe, I think it's about 10% goes into the Innovation Fund, and a concrete thing could be negotiating, getting 15%, 20% over time in there, and trying to channel more money here through commercializing clean tech.
Okay, so there are some solutions. I think you had a question. Yeah.
Thanks a lot, Friedrich Lucke from the Industry Department, DG Grow of the Commission. I just wanted to ask on your last answer. Your answer seems to imply that you think effectiveness is less important than efficiency when it comes to these decarbonization and industrial policy programs such as the Inflation Reduction Act. What is the calculus for saying that effectiveness is less important than efficiency there? Is there perhaps another way to look at this, that the productivity growth that was caused by the Inflation Reduction Act or similar measures, even if they were not efficient, and the decarbonization benefits that these programs yielded were perhaps more important, and we shouldn't be overly concerned with efficiency?
Yeah, I mean, I think the political economy impacts were very important, right? And this notion of targeting investments to Republican states to try to create some kind of consistency over time. And clearly also in America, that was kind of the only solution. I mean, there was no other way you could get through Congress support. I think they had to go with subsidies, and that. So I think in America it kind of made sense, and it was the best, as far as I can see as an outsider, the best that the Democrats could get through, and they kind of did the best with the cards they had. But yeah, it was still very inefficient and they spent a lot of money. And I think sometimes in Europe we have this sense that the Inflation Reduction Act is incredible and is great and has driven all of this manufacturing growth. And I don't think it's quite that simple. I think Europe has still kept pace, still has a lot of work to do and can improve, but has reasonably well kept pace, and doing so using a fraction of taxpayer money, which you mentioned the EU budget. I mean, we just simply cannot do the same thing that the US did at a federal level. It's not possible.
But maybe one option beyond, net zero industrial act, reshoring, 40% target, and so on, is really partnerships. And we wrote a paper a long time ago on this idea of decarbonizing, de-risking while keeping decarbonization through partnerships. And the whole idea was, to have partners that maybe can produce more cheaply, so you reduce the subsidies, but you still, Europe could contribute to not only the financing, which is, probably easier from Europe, but also innovation. And, just not try to do it all, but have, we called it as a supplementary supply chain, not necessarily an alternative that you suddenly, but I do think that this brings us to trade deals, how frankly slow we are. The UK signed before us with India, say, for that matter, they signed before us with Trump, but that's a different story. But anyway, I do think that, finding extensions, for us to do this more cheaply is something that we can do better than the US, because the US even Biden just couldn't go to Congress and say, you know what, India is my place to go. Trump is probably going to get India in as a kind of a platform for manufacturing of green tech, maybe not, because that's not his cup of tea, but other, issues. And I think even tech companies, whether it's, everybody is thinking India, 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 or you have Apple and making this big announcement that they would produce only in India. I don't think they really mean producing, but maybe assembling. But there's this obvious direction that, okay, we can't just do everything in China, So the question is Europe really taking this step of thinking, okay, partnerships really beyond Critical Raw Materials Act? So maybe Max or,
because I very much like this idea, and I think when we're trying to look at how to respond to China, we're too focused on China and making it too difficult for us and too easy for China in finding the response. And I think one way is to, first of all, come to an own agreement on what Europe wants, defining what the issue is, like how dependent in certain areas do you want to be on China. And it doesn't mean not engaging with China at all on these issues, but I think there needs to be an understanding on these critical emerging technologies and also future energy. There needs to be, I think, some time of limitation. And we've talked about the idea of, well, then China will just produce in Vietnam and elsewhere. And I think the solution really is also for Europe to come up with a positive story for the global South, for other countries, to build up capacities. And this has, I think, a knock-on effect, because what we've seen it in solar, we're seeing it in wind, where in the past, European machinery companies participated in the buildup of overcapacities. This is no longer the case. So it's a death that comes downstream that not only affects the output, but it affects the whole value chain, where also Europe still has some competitiveness, but also here companies are feeling the pressure. So coming up with a positive narrative and story of deals with the global South, we are going to build up capacity with you where you cannot compete with China because the prices are so slow. And then ideally this then also creates demand for machinery. So it's replicating some of the items that China is doing for its own development, just with the global South. So, and this is no longer then necessarily against China, but it's also facing the competition with China and mixing things up a bit. But it's clear that Europe will not be producing everything on its own. that's just not a compelling story, and I think that shouldn't be the aim here. So, but I think looking beyond the borders and kind of moving also away in this fixation on China, and coming to terms on what the reality is, and coming up with a positive story, but where China is not the center of it.
I love that, Max, because I can now report on a recent trip to Indonesia, where they have this massive dependence on China for nickel, and and you can sense that everybody wants. I mean, it's great to have China, but why not also somebody else, not only somebody else? And I think that is basically. I mean, if we have that fixation, as you call it, imagine if you're Indonesia, you're even more fixated because you feel that, wow, I mean, my dependence is even bigger. It's like, so I actually think that, and frankly, I know this is maybe pushing it a lot, but we did say that in that report, that this is actually not so bad for China either, because in a way, it could help China not hit the wall, if you see what I mean. Like, because eventually, you cannot produce everything for everybody. It just can't happen. You're 30% of global manufacturing. You want to be 100? So in a way, I feel like maybe it sounds ironic, but it isn't. I actually think it's good for China, because in a way, it puts China in a position where it has to find alternatives. It could find services. It could find, you name it, because it's just not so easy. I would even say it is just too easy now to focus on manufacturing for China because of that fixation, or because of, and it is not good for China. This is what we were trying to show with this paper, that it sounds good, but it isn't good, because margins fall, and you just don't know. And I didn't even talk about deflation in China. Latest data, minus 0.1 again. I mean, nobody can say by now, because I still remember, I got like bashed by February data. Oh, this is because you don't know about, what is it? Whatever. I can't even remember. The comment was very negative. So, meaning because of one occasion, there was a seasonality effect, Chinese New Year. No, there's no seasonality effect. China is in deflation, full stop. And I wish it weren't, But the point is, if you want to stop being in deflation, you better reduce overcapacity. If you want to reduce overcapacity, do something else. But if the world doesn't kind of, quote unquote, force you a little bit, you keep on doing it. So in a way, I feel it's even our responsibility if you push me, because I don't think this is good for China. I actually don't think this is good for China. So on that note, final question, final comment. Anybody? We're going to finish right on time. I thank everybody for being here. And if you have any comment on offline or anything you want to add to the conversation, you're most welcome. We thank people online for attending this seminar. And thank you, everybody, for being here.